Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the triangle where we're looking for a sideways 5-wave structure in an A, B, C, D and eventually a wave E for then continuation to the upside. Couple of rules that are important is that 4 out of the 5 waves have to be a zigzag structure, meaning a 5-3-5 to the upside or a 5-3-5 to the downside. Wave A and wave B have to be a zigzag structure, and if one of the waves is not a zigzag structure, it usually is C, D or E, where C and D tend to then be a double or a triple zigzag, and wave E can also be an internal triangle. We also want to see volume moving to the downside as the pattern is evolving, which at the moment is true as well. So if the high potentially of D is in over here, right on top of the 786 area, which is a common target for a wave D in a triangle, then we can be looking for the target area for wave E, which is taken from the low of C to the high of wave D, which most commonly is between the golden pocket and the 786, giving us a target between 36.4k and 36k. In that area, we also have some support, especially this blue box over here between 36.1k and 36.2k. But the first area of support is actually just above the golden pocket at 36.4k to 36.6k. In this scenario, we then expect more upside to come without price taking these lows over here. So without price going below 35.5k, as this is the low then of wave C, and wave E is not allowed to take the low of this wave C. If you then look at the second scenario here, which is a flat scenario in an A, B, and then eventually a wave C, we're looking for also a bigger 3-wave structure in a bigger wave 4 before then continuation back to the upside after wave C is in. The most common target area for the blue B is between the 1.236 and the 1.38 pulled from the high to the low of this wave A, sitting between 38.7k and 39.2k, which is a nice confluence with the golden target box that we have here, sitting between 38.5 and 39k, after which you then expect an impulsive move to the downside in wave C, 1, 2, 3, 4, 5, where the most common target for wave C is between the two 1.618, which is between 33.7k and 32.1k. Now when we look at this scenario, wave B has to be a 3-wave structure, and this over here cannot be the high of wave B anymore because we wanted to see a 5-wave structure to the downside, which we didn't get. Very much a 3-wave structure to the downside over here, and therefore for this wave B, especially in a expanding flat where the wave B high is above the wave A high, we are then looking for a bigger 3-wave structure. In this scenario, we're then looking for wave W over here and then a double zigzag A, B, C, right? So this is then a first zigzag to the upside in a wave W. Then we're looking for a wave X and then another zigzag to the upside in a wave Y, where inside this wave X, we then have another W, which is a zigzag. Then we're looking for an X, also zigzag, and eventually a wave Y, and then either a flat structure or a triangle structure to finish X before then another zigzag to the upside. But the result is pretty much the same, where you don't really expect price to move below this low here, 34.7, and the probabilities are at the moment not yet that high to also take this low at 35.5k. So in this scenario, you would prefer to see eventually a move to the upside as well. If we then look at two more complex scenarios, then over here we have a WXY where we have W zigzag, X zigzag, but then you have a wave Y. Wave W and wave Y in a sideways double combo corrective structure are not allowed to be the same structure, meaning if wave W is a zigzag because it's clearly not a flat, and wave W can only be a flat or a zigzag, so because it is not a flat, we have to think about a zigzag, it means that wave Y cannot be a zigzag and can only then be either a flat or a triangle, meaning that in this scenario, for a flat, you're also going to still take the high at 38k before you're going to move to the downside. And you see there's a little bit of a pattern evolving here, right? So it leads to first new highs before new lows if we're thinking about a flat. And if we think about a triangle, then we do expect price to continue ranging over here, right? We have the support areas as just mentioned, but then again, you don't expect new lows before you're going to grab the highs. If we then look at the second scenario, which is also a WXY, but a little bit more complex here, where wave X this time is not yet in. So the wave X moved to the right side over here, with then inside wave X an internal WXY, which is possible in a wave X. Wave W and Y can only be zigzag or flats, and wave Y also a triangle, but X can be any correction. Where in X we then also have a WXY zigzag in wave W, zigzag in wave X, but that means that the blue wave Y cannot be a zigzag. It can only be either a flat or a triangle. Now, if this is the low of X, then currently this being a triangle doesn't make sense, and this being a flat, well, we didn't take this low or retraced at least 0.9 Fibonacci of this move to the upside for this to be a flat. So this currently is a low probability scenario, but I at least want to mention it. If we then go to the micro and zoom in to what has happened over here from an Elliott Wave point of view first, before I take the other confluences on my chart, then what you can see here is price moving towards the upside very, very nicely, right? Coming out of this range, moving to the upside as the highest probabilities were now or have now played out, right? Because we were looking for that move towards the upside, where now you can see that the highest amount of volume is in the high, and that is not really what you like to see for an impulsive structure to the upside, right? Where you can count a 5-wave move, that's okay, but preferably the high over here, the highest amount of volume is in a wave 3. Then you want to see a wave 4 before a wave 5 towards the upside. Now, if we take fibs from this range over here before the pump to the high of the pump, meaning if this is indeed a wave 3 to the upside, then any range before has to be more of a wave 2 range, right? So we should be able to take fibs from these lows to the highs to then look for a 4 and a continuation to a 5. Well, the common target area for a wave 4 is the 0.5 Fibonacci, that's fine, but an invalidation is the golden pocket, and you can see we have hit the golden pocket over here, also respected it for now at least a little bit for a bit of ranging, but that invalidates a wave 4 and really lowers the probabilities that this is an impulse to the upside and increases the probabilities a bit that this is a wave C to the upside, and then again a bigger A, B, and then a wave C structure. Now we can become more confident for price to move to the downside once more when we also see more local bearish CVD, which at the moment is not yet the case, but that is something we have to pay attention to. And if price is then moving to the downside, I'll repeat the support areas over here, 36.4, 36.6, and then we have 36.1 to 36.2K. Now we also were at resistance here, 37.4K to 37.5K, and that is this area over here. If we look at the different confluences, then what we had was the value area high in that area, the blue line over here. We have the bigger support resistance box, which is the white box that you see, but also we had the white line here and we had the red line over here. Now the white line was the 4-hour gap, which is now filled. So if I go to the 4-hour time frame, we were looking for the 4-hour gap to be filled, right? This is the high of the gap over here, where we mentioned last week we hit the low of the gap once, which is this candle. So we hit the low of the gap once over here, got respected, bit of a rejection, but the moment you come back to this low of the gap, like this line, which we did over here, probabilities are very high to fill the gap to the upside. Now it took a little bit of time, of course, typical weekend price action, but the probabilities played out and we filled the gap towards the upside, which of course is very nice indeed. And then we also had a small little point of control of this part of the chart over here, which is the red line, right? So a little bit of a point of control at 37.461, which got respected, and that is where price then also rejected in confluence with the value area low with the support resistance area, which then led to me having a target box in that area as well for resistance. If we look to the downside, then you can also see that the point of control is one of the confluences that I have in the blue box over here, and the value area low of this range is one of the confluences in the blue box down here. And as Bitcoin tends to range, right, trade the range until it breaks. No financial advice, but currently it has been playing out for quite a nice amount of time. Of course, we have a little bit of price like moving to the upside and the downside outside of the range, but so far typical wave 4 price action where we're just going sideways. If we look at the CVD divergences, then these bullish CVD divergences have played out now. We had bullish CVD divergences over here, price taking this high, which meant that these bullish CVD divergences played out, and then price came back once more, also bullish CVD between these lows, where the target was this high. And that has also played out with price now moving towards the upside. If we then finally look at the probabilities of all these different scenarios, then currently the probabilities are increasing for a triangle. And the main reason for this is that the highest amount of volume here is in the high, which increases the probabilities. This is a wave C. Increasing the probabilities, we can expect a move to the downside before continuation to the upside, as the general probabilities here is that price will take the highs of 38K before moving at least below this low. This is the main area of 34.7, but the probabilities aren't that high to move below this low at the moment as well, at 35.4K, which leads to what I wrote over here. So generally, probabilities are still higher for price to move towards the upside, continuing the trend, right? Trade the trend until it breaks, they always say, but nonetheless, no financial advice. But we do expect 38K to be taken at a certain moment, but that doesn't mean we don't get waves to the downside as well, because more locally, highest amount of volume of this move up in the high, price retracing to the golden bucket, too deep for a wave 4, increasing the probabilities as well for price to move to the downside a little bit more. And if we look more locally, then you can also see that price now went to the 886 over here. Just quickly want to show this. You can see the 886 has been hit, even though the low has not yet been taken. But the 886 basically means any move to the upside has a higher probability of being a C or a Y. Increasing probabilities, price will find more downside locally as well to at least take this low over here at 37.063 on my chart, but that could still also increase the probabilities for a move to the downside to reach those support areas. So generally, we are looking for more upside. We are looking for 38K to be taken, price moving up to the golden target box that we have here, 38.5 to 39K, very, very important indeed. However, more locally, we are currently having higher probabilities for a bit of a drop where I would be looking for the support areas. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.